Welcome to today's explainer. Look, if you're an online seller or, the accountant who has to somehow keep an online seller's books in order, you already know e-commerce is absolutely incredible for reaching customers. But behind the scenes, it can quickly turn into a massive accounting headache. Today, we're focusing on solving exactly that. We're going to demystify e-commerce accounting and give you the actual tools to conquer that messy ledger once and for all.
Okay, let's dive right into this. 100. That is the number of hours per month that so many accounting operations are just wasting on manual e-commerce reconciliation. Think about that. According to our sources, that's literally 2.5 weeks of full-time work entirely lost to dealing with inconsistent data, manual data entry, and trying to decipher messy reports from a dozen different platforms. If you have ever stared blankly at a screen trying to connect a Shopify sale to a Stripe payout, you know exactly how painful this is.
But don't panic, we have a roadmap to get you out of this mess. We're going to quickly cover the bookkeeping nightmare, the double counting trap, gross sales versus net payouts, the highway versus city streets philosophies, choosing your actual automation tools, and finally, how to build bulletproof books. Let's jump in.
Section 1. The Bookkeeping Nightmare.
So most traditional businesses operate pretty simply, right? A customer pays $100, you receive $100 in your bank, and you record $100 in sales. Easy. But e-commerce? Think about what actually happens when you get a deposit. A single deposit from Shopify into your bank account is almost never just your sales. That one number is actually a bundled-up mix of your gross sales, plus shipping charges, plus collected sales tax, minus Shopify subscription fees, minus transaction fees, minus payment gateway fees, and minus refunds. Trying to manually untangle this giant web and match Shopify sales, Stripe payouts, and PayPal fees to a single bank deposit, it is basically a recipe for disaster.
Which brings us to Section 2. The double counting trap.
So the crucial point here is this. When you're out there untangling that web by hand, it is incredibly easy for the exact same transaction to get entered twice. And when that happens, your revenue looks artificially higher than it actually is. Your compliance checks fail, and your reports become completely misaligned with reality. How do these duplicates slip in? Well, our sources highlight 4 main culprits. First, manual data entry. Logging sales in your store management software and then manually typing them into QuickBooks without a real reconciliation system. Second is improper syncing settings, where automated systems push transactions without clear categorization rules. Third, bank feed conflicts. This happens when QuickBooks automatically imports your bank deposits, but if your e-commerce platform also imports the same revenue, bam, you've just double counted it. And fourth, the confusion between gross and net deposits, which, actually, we really need to look at that one much more closely.
Section 3. Gross sales versus net payouts. Listen, recording your net deposits as sales is the ultimate rookie mistake. It fundamentally distorts your entire financial reality. Here is the stark contrast. Gross sales are what the customer actually paid for the product. The net deposit, on the other hand, is what you received in your bank account after the payment processors took their cut. You absolutely must record the gross sales as your revenue. Why? Because platform and processing fees are expenses. They are not reductions in revenue. If you only record the net deposit, you're understating your revenue and completely hiding your expenses. That totally ruins your ability to calculate accurate profit margins. Fees always have to be categorized separately into expense accounts.
Moving on to Section 4. Highway versus city streets.
Since manual entry is clearly a nightmare, we obviously need automation. But accounting automation tools generally follow 2 very different philosophical approaches. First up, we have Summary Sync. This is the highway. It's the fast, super efficient route. Instead of sitting there weeping over a spreadsheet for every individual coffee mug or t-shirt you sold, the software bundles up all your daily sales, fees, and refunds into one clean consolidated journal entry. And this entry perfectly matches your bank payout, which makes reconciliation an absolute breeze. It keeps your ledger squeaky clean. The only trade-off? You do lose some of that granular street-level order detail inside your accounting software.
Contrast that with Itemized Sync, or what we call city streets. This method takes the opposite approach and records every single transaction individually. You get the maximum possible detail right there inside QuickBooks or Xero, which can be fantastic for deep item-level reporting. But be warned, if you are a high-volume seller, forcing thousands and thousands of individual transactions into your accounting software can create a massive data traffic jam. It'll slow down your system and make reconciliation incredibly tedious.
Section 5. Choosing your automation tool.
Now, what's really interesting about this slide is how these philosophies play out in the real world.
The market has really segmented to offer solutions for basically every type of business. Looking at the landscape, EduX, for example, is super famous for being a master of the summary sync, perfect for high-volume sellers who want squeaky clean books cruising down the highway. Synder, on the other hand, leans heavily into enterprise features and complex ERP system integrations. Meanwhile, PayTraQer and Bookkeep offer some pretty unique flexibilities that we should definitely look at more closely.
Let's focus on PayTraQer for a second. Their whole philosophy is really about choice. They allow you to just flip a switch between summary and itemized sync, adapting beautifully as your business scales. But honestly, their standout feature is the native undo button. If you've ever mapped an account incorrectly or made a massive bookkeeping mistake, PayTraQer lets you literally click a button to roll back those synced transactions without messing up your core data. It is a total lifesaver. Plus, the moment you connect it, it automatically downloads your last 60 days of historical transactions, getting you completely caught up instantly.
Now let's look over at Synder and Bookkeep. Synder really shines with its smart rules. It uses this automated if-then logic. For example, if a product description contains the word serum, Synder automatically assigns it to the skincare class in QuickBooks. It can categorize thousands of transactions completely hands-free. Bookkeep, meanwhile, not only provides those daily summarized journal entries, but they offer robust managed services. We're talking tracking cost of goods sold and literally handling your multi-state sales tax registrations and filings for you, the whole shebang.
Section 6. Building Bulletproof Books. And this brilliantly illustrates how you can cut through all that noise and build accurate automated accounting. You really just need to answer the 4 questions in this framework. First, what accounting system are you on? Tools integrate very differently with QuickBooks Online versus desktop versus Xero. Second, where is your data coming from? Are you managing direct gateways like Stripe or massive marketplaces like Amazon? Third, how much detail do you actually need? Like we talked about, do you want the highway summary or the city streets itemization? And fourth, what is your operational scope? Do you just need clean reconciliation or do you need full-blown inventory and sales tax management?
Answering those 4 questions will guide you directly to the automation tool that actually fits your business. So I want to leave you with this final, provocative thought to consider today. When you look at how you manage your e-commerce finances right now, is your current process forcing you into a corner with manual nightmares and double counting? Or is it empowering you with the choice and flexibility to run your books exactly your way? It might just be time to take control of your ledger. Thanks so much for joining me on this explainer, and hey, here's to cleaner, faster accounting.